And then when you have this foundation, what it allows you to do is now I know what I'm looking for, right? So now I know, hey, I'm looking for the first 5 minutes to an hour in the open. I'm looking at, let's say, I don't know, ES, or I'm looking at Tesla, or whatever it is. I can go back in time to, let's say, the last 3 years, and I can go through every single day, write out my game plan, spend time on like, hey, the market gap down, the first 5 minutes to 1 hour, here's my entry criteria. Would I take the trade? No, yes, no. Take that, build data around it, and now I maybe, in 3 years, I maybe got, I don't know, 50 trades. Now I have 50 trades. Some I made money, some I lost money that I can go through. I'm like, okay, let me go through this individually. Let me spend time. This is where the time element kicks in, right? What this does is you go back in time, you back test, you build your reps, you get familiar with the market, you get familiar with what's working, what's not working. Once you get really familiar with that, now imagine what happens in real time of a trade that you've back tested for 3 years, a 3-year time period over and over again. You get so comfortable in seeing these moves that you know how to execute it, when to execute it, when it may work, when it may not work. And obviously not everything is going to be in the same environment, but you get more comfortable. And that's where when you get this, any kind of strategy, the idea to go back in time and back test it, play with it, have the strong understanding, I think is something that every trader in stage 2 should be doing, right? That's why you'll see like traders in stage 4 or 5 really don't back test. They kind of have things down and they have enough experience and reps to execute stuff. But I think when you're in stage 2, like, why not accelerate your learning curve and try it? And you might try this and you might say it doesn't work, it doesn't make sense. Okay, go to another one. But have the proper foundational understanding of what this strategy means. Like, if I give you these rules, like, your question should be, what does this mean? It's essentially means we gap down, market is weak, market tries to make its first leg up isn't being able to have any follow through, so that continuation of sell-off happens, but the action is seen on market trying to push up. If market gaps down and it pushes down, we typically get that recovery. I want to see the market trying a little bit, and if it does try, you start flushing. There's also this other thing with like the morning top setup that I see. The market opens at 9:30 a.m., which is something I'll drop here. Sometimes the market doesn't really open at 9:30 a.m.
Why?
It doesn't make sense, right?
It doesn't, yeah. That's what I was thinking.
Yeah, so sometimes the market doesn't open at 9:30 a.m. I mean, what happens is, so sometimes there's particular days that some orders need to get filled, really large orders. So those orders cannot get filled right on the open. So a lot of traders on the floor, a lot of, let's say, institutions that need to kind of offload 2 million shares, 3 million shares. They're like, they'll send it to someone on the floor and they're like, I need to offload this on the open.